Okay, so let's have a look at the income statement or the statement of financial position for the 2021 question 17 exam. So once again, before you even tackle this question, you need to know the layout of the statement of financial position. So there's four headings: fixed assets, current assets, less creditors falling due within 1 year, and then you got your finance by. Fixed assets are long-term assets that we have for over 1 year. Okay, they will vary in the question. Current assets, they're always going to be four items: those in stock, debtors, cash, and bank. Just be careful with bank. If bank's on the debit side, it's an asset. If bank's on the credit side, it's a bank overdraft and it's a liability. Your creditors due falling within 1 year, it's either going to be a bank overdraft. So remember, your bank, if it's on the debit side, it's an asset, goes into your current assets. And if your bank's on the credit side, it goes into your creditors due within 1 year, and you got your creditors. So you're going to add up your assets, add up your liabilities or your creditors due within 1 year, and you're going to take those two figures away from each other to get your working capital, and your working capital then is added onto your total fixed assets to get your total net assets. And then your finance by is made up of three things. You're going to have two things. You're going to have your capital reserve, your authorizing your issue, and you're going to add on your reserve that's taken from the income statement. Those two figures are going to be added on to your creditors falling due after 1 year. So there are your three items: long-term loan, share capital, and your reserves from the income statement. These two are added together, and this figure should be the same as this figure. So once again, it's broken down to 4 sections. Take a section a night, learn it off, and then put it together then in the 5th night. So as part of this question then, we've highlighted all the figures that have gone in so far, so now we're just left with the items that go into our statement of financial position in your fixed assets, or in the different sections of your statement of financial position. Remember that your equipment will also go in here. So your first item is going to be your fixed assets, and that's going to be one of the 4 headings. And your fixed assets are made up of cost, accumulated depreciation, and your net book value. Now these headings are just used for your fixed assets. They're not used for the other headings that we have in the question. So we're going to go back to our question, find out what our fixed assets are. So anything that we have for long term that's over 1 year will be your buildings and our equipment. So we're going to put in buildings, and the cost for buildings are 220,000. And then we're going to put in our equipment, which is 40,000. Now, at the end of the question, it tells you about depreciation. So the only item that's depreciated in this question is our equipment. So we don't have any depreciation for our building, so it's going to be 0. And then we've calculated what our depreciation is for equipment, and that's going to be 8,000. So 8,000 is going to go in here. Underneath accumulated depreciation, on the line for equipment, and that's going to be the next part. So now we've put in our equipment in twice, so we know we're on the right track. Now your net book value is the value of the asset after depreciation. So remember, depreciation, we depreciate our assets due to wear and tear, usage, and how old it is. So your net book value is taking the 220,000, take away what's in the accumulated depreciation column, and that's going to give you your net book value. So for equipment, it's going to be 40,000, take away 8,000, and that gives us 32,000. And then we want to get the total for each one of these columns. So for our cost, we're going to add 220,000 plus 40,000. For accumulated depreciation, we're going to add 0 and 8,000. And then for net book value, we're going to add 220,000 plus 32,000. And we're just going to highlight it, so that's your sum, and then these two accounts then are finished and closed off, and the only figure we want to use from now on is this 252,000. So that's your first part, your fixed assets, cost, accumulated depreciation, net book value. Remember, these headings are just used for your fixed assets. Your next heading is your current assets. So that's going to be a heading. So your first item that always goes in is closing stock. And closing stock will be given to you at the end of the question, so it's 5,000. Okay, and remember to highlight so we know that they're gone in. So the next item here, we said cash in hand, it goes into your statement of financial position as a current asset. So we're going to have cash. $5,700. So we take that off. Next in debtors, it's going to be into your current assets. So debtors are people who owe us money. So it's going to be 12,000. Okay, so creditors, current liabilities, so that's all that we have in there. So you're going to add these three up. So 5,000 plus 5,700 plus 12,000, and that's going to give us our total for our current assets. So your next heading then is creditors due within 1 year. So that's going to be your heading. So if you work down here, so we got our creditors, statement of financial position, current liabilities. So the first one's going to be your creditors, which is 9,000. We're going to put this in the first column because we need to take away our current liabilities or creditors due within 1 year away from our current assets. So we're going to put them in this column here, and the total then we're going to bring across to the second column. So our creditors of 9,000 have been entered. Next one, bank overdraft, that goes into your current liabilities as well. And your bank overdraft then is 5,000. So even if you have a ruler to put down to make sure that you're getting the correct figures, because sometimes you can take the wrong figure. So bank overdraft is 5,000. You don't have any more items for the current liabilities. That's a finance buy and that's a finance buy. So we're going to add these two together. And that's going to give us 14,000. And what we're going to do is you're going to take the total for your current assets away from your creditors due within 1 year. And that's going to give us your working capital. So 22,700 minus 14,000. That's your working capital. And then that 8,700 is going to be added on to the 252,000 to give us your total net assets. So we'll add these two together. So our balance then, our worth in the business is 260,700. So now we want to find out how do we finance the business. So your next heading is going to be finance by. So where did the money come for the business? So your first item is going to be long term. So long term loans. So let's see in the question, do we have any long term loans? We've got a 9-year loan of 81,000. So we'll put this in the very end. We're just going to add on a figure to it. Then we're going to have capital and shares. So our shares are going to be made up of authorized and issued. So authorized is how many shares we're allowed to sell in a business. Issued is how many we have sold. So you've got share capital. And back at the question then, up at the very top, it'll tell us that your authorized share capital is 400,000. So it's 400,000. And then in the question then, it'll tell you what our share capital is. So share capital 160,000. Okay, then we're going to add our capital or reserves. So add profit and loss from the 31st to the 12th, 2021. So that's just taken straight from our profit and loss that we just did, so that's 19,700. I'm going to add these two together. So 160 plus 19,700. So we can do a double line to say we're not going to go any further with that. So we've got two figures in the end for our finance buy. So this is going to be our capital employed. So that's how much the business is worth, or where the money came to come to finance for business. So when we add these two together, your total net assets up here and your capital employed, they should be the same. And when they're the same, then you know you've done the question correctly. And then when we look at our question, we will see that all our items have been ticked off or highlighted, so we know we've put them all in. And because it's balanced, then we know we've done the question correctly. So it's really, really important that you know the layout of your income statement and your statement of financial position. So that's why they're color coordinated for the income statement, color coordinated for the statement of financial position. So just learn this section each night. So it's going to take you 5-10 minutes, and then put it together then on the last night. And that is how to complete the 2021 question 17 income statement and statement of financial position question. If you have any questions, just get in contact.